Ladies and gentlemen, welcome back to the channel. A lot happened today in the broader markets that is fueling this risk on behavior in markets today. And we'll break that down in just a moment. But look at this. Rezolve AI up to $6.91 per share, up 10.5% today. And guys, let me tell you now, this is only just the start. In my personal opinion, I think there is the perfect combination of factors right now internally with this company that are going to fuel this stock to explode higher from here. As I've talked about on this channel before, I think $20 per share is in store by December 31st. That number could be a little low. I think we could be even higher than that because of this setup that we are currently experiencing. Now, for full transparency's sake, I will also share my position. If I've sold, if I've added more, what I'm doing with my position, and my thoughts around the stock at today's level. Ladies and gentlemen, let's get into all of this information. Hit that like button, subscribe to the channel, check out the link down below in the description of this video if you want to come join the trading community as well. We identified Rezolve very early, and that is what we do over there. We find high quality stocks, identify them, invest in them before Wall Street or retail investors ever figure out the opportunity. And now we're starting to see Wall Street discovering Rezolve. Now, first things first, let's talk about this perfect combination of factors that is at play right now, okay? One of the things that drove me to Rezolve AI in the first place was the heavy insider ownership in this company. Rezolve, about 40% of all shares are owned by insiders in the company. And I was always under the assumption that with a market opportunity as large as Rezolve has with AI, commerce, and even now their professional services business, I seen it as a very low likelihood that we were going to get insiders that just dump their shares. Okay, so that's number one. Insiders own about 40% of the stock. Well, private companies, owned about 14% of shares. So we have 40 plus 14, plus Citadel bought a 7% stake in the company, plus you had about 5 to 6% ownership by institutional investors before this rally started, like when the stock was $2.80 or so. The rest of the shares were owned by retail, about 34 to 40% or so. This was before Citadel bought their share, so the numbers are going to look a little bit different, but you get the idea. So roughly 66% of shares are kind of locked up, right? With institutions owning 40% of the stock, and you have firms like Citadel that took a long-term position, bought 7% of the company. That's 47% of shares right there that are really not trading. If anything, insiders are probably buying more of the stock. You've seen Wall Street now, since the de-SPACing is over with, they are now looking at Rezolve as an opportunity to get in. You started Rezolve from a place of almost no insider ownership. So you don't have a ton of shares from Wall Street to sell at this point because they're just now getting in. So you have anywhere from, I would say, 60 to 75% of shares right now that are essentially locked up. Now, you also have retail investors that are starting to get involved in this stock and understanding the potential, right? We're at this early innings of that, very early innings of that. And there might only be 20 to 30% of shares actually freely trading out there. Now, how much of retail is actually, diamond handing or like holding on to their shares, that's impossible to know. But from the things that we can prove, 40% insider ownership, 7% stake from, Citadel, 14% private ownership, again, you're at minimum looking at 61% of shares that are essentially locked up right now. At minimum. Like bare bones minimum. Let alone only 5% of shares were owned by institutions before. So maybe some of those institutions want to take profits. But what about everyone else that is discovering the stock? You're probably looking at 75 to 80%, in my view, of shares that are owned by long-term investors that have no plans in selling the stock at anywhere close to current levels, right? You got a winner. The stock only has like a $1.4 billion, market cap. It's in an over $1 trillion total addressable market, trading at a fraction of the valuation of other AI stocks. Now, I say we're very early innings in Rezolve because if you look at the volume, you've seen more elevated volume consistently recently. But the last 3 days, the stock has went up 21.65%, 11.21%, and today the stock is up 11%. So you've had a really good last 3 days. The volume never even hit 30 million. Okay? While retail has started to understand the stock and get involved with the stock, it's not like mainstream yet at this point, okay? It's not a stock that everyone knows about because the volume. Now, what's interesting about this whole argument is with the amount of shares locked up being, anywhere from 60% on the low side to maybe 80+% on the high side, you may get these low volume rallies because there's just not a lot of shares out there. But when we do see a big volume spike, that's going to be a huge day for the stock. Okay. Now, as we know, the big catalyst is coming October 1st. That is when Rezolve is likely going to raise guidance for the end of this year. Rezolve hit 70 million in ARR by mid-year. They set a target for 90 million. They came out in April and said they're going to be well over 100 million. And all indications since April, since we've heard, the CEO speak a couple of times, are that you're going to see some very impressive numbers October 1st. I'm estimating anywhere between 150 million in ARR by the end of this year to 300 million. Things get a little insane for 2026, but if you take 300 million in ARR times a 15 times price to sales, you have a $4.5 billion market cap company. The stock is currently at about 1.4 billion market cap. So boom, that's a 3.21x from here. That puts the stock at, $22 per share by the end of this year. $22.24. That's based on 2025 numbers at a 15 times price to sales. Okay. If the company starts throwing around loose guidance next year for $1 billion in ARR by the end of the year, times 15, for the price to sales, now you're looking at a $15 billion company divided by 1.4 billion in current market cap. That's a 10.71x from here. That puts the stock at $74.25 by the end of next year. That's why, again, I'm sitting here saying, are insiders going to sell anytime soon or sell enough to really dump the stock? I don't think so. Are institutions going to dump the stock? I don't think so. Not in massive numbers. Are retail investors going to dump the stock when you have this kind of upside potential? Reasonable upside potential, right? Probably not. One thing you need to know, though, is I think once the stock gets in the 20s or 30s, you're going to get dilution. Now, we're going to have a new update for, earnings and numbers and how much cash they have coming on October 1st. This company wants to be aggressive in M&A activity, right? They want to be a market leader. There's going to be dilution at some point. So you could take 20% of this off top, and you're going to be looking at an end of the year share price for next year, $59.40. That is with 20% total dilution. That's a lot of dilution. Okay. So any way you really want to put it, I think you're looking at some big upside. And I think we're in a position right now where a lot of the shares are locked up, not legally locked up, but in the sense of, again, insiders are not selling. Private companies are likely not selling. They seen the opportunity from the start. Wall Street didn't even really have a position in the stock. So you're now seeing Wall Street, getting a position in the stock. Retail, the early guys, me, you, the next guy, are likely not selling because fact of the matter is we're still in the very early stages. Like, where's the huge selling pressure going to come from? It's almost like a bit of a weird, short squeeze going on here, but not a short squeeze. Like just the buyers are there's a limited amount of shares. So shares are going up a lot. Now, on that note, if you guys want to come join the trading community, come find these small cap exceptional AI companies with us before Wall Street does. Check out that link down below in the description of this video. Portfolio is up 165.73% year to date. Yeah, and a lot of that has to do with Rezolve. We also have some other companies that have done well also. So come get involved. Some that we are pretty excited about in the biopharma world also. But if we look at Ortex here, option activity today from hedge funds and institutions, pretty bullish. You only have one trade, a February 19, 2026 $6 call for $116,000 with a break even of $8.22. Okay, so that's projecting some significant upside. Short interest, as you would expect, has been rising as well in the company a little bit from about 6.37% back on September 2nd to 8.63% today. The dollar amount sold short is at 63.83 million. So again, as a lot of these shorts, like the dollar amount sold short is up 1,000% in the last month. You may be seeing a little bit of a short squeeze here as well. Even though you don't have a high short interest, the amount of shares that are artificially locked up means there's not a lot of shares out there. So when shorts want to cover, it's very difficult. And each short covering affects the stock disproportionately more than it would another stock that has a bunch of shares, freely trading. That's just, again, my thought. My theory, there's some of that I can prove. Again, 40% insider ownership. Citadel bought a 7% stake in the company, pledged those shares to own them long term. 14% private ownership. That's the bare minimum. That is a lot of restricted shares. Okay, a ton of restricted shares. So I think we're on to something here. Now, I do also want to say that yes, there is some broader market positive things happening today, and that's great. It's great that retail is starting to get involved with this company as well. Again, I think we're early stages. I'm not a financial advisor. I'm not a financial planner, but in a best case scenario, this could be $100 stock by the end of next year. Like, you could put numbers to paper and make that make sense and still have Rezolve, as long as they project $1 billion in ARR by the end of next year, still have Rezolve at half the valuation of, Anthropic, or, less than half the valuation of Sierra AI, for an example. And the market cap opportunity means that there's going to be massive amounts of growth into the future. By 2028, you could have over 10 billion in ARR. You could have 20 billion in ARR by 2028. What are those numbers going to look like? I mean, it's a winner, right? So I do think we're onto something. I'm not a financial advisor. I'm not a financial planner, but I will say the RSI is at 89.73. It is very high. Don't be surprised if we get a chill out day for a little while. The stock trades sideways for a few days, but the real catalyst is October 1st. And just for full transparency's sake, again, I currently have $90,103 in this stock in this portfolio, up $53,488 total, up 146%. Average cost $2.82. Currently own 13,000 shares, and 67.23% of this portfolio is in Rezolve. So it's a very large position. I do have 15 of the options here. They Rezolve 250 calls for February 20th, 2026, with a value of about $6,600 and a total return of $5,100. Again, I've talked about this before on this channel. What I did here was a little reckless, right? In the sense of you should never have so much of your portfolio in one stock. I do things a little different. If I see an opportunity that is so no-brainer like Rezolve was at $2.80, if you know it's checking all of the boxes, like I said in some of the first videos I posted on this channel about Rezolve, around $2.50, that I struggled to find something I did not like with the company. Like I struggled to find like the thing that would keep me from getting a large position, and I never found it, and I still haven't found it. So I look at it as like calculated, reckless risk. That's what I did. But should you do that? Absolutely not. I'm not a financial advisor. I'm not a financial planner. Do what you guys want to do. I share my thoughts, my projections, the news, but your financial situation is likely a lot different than mine, and vice versa. This portfolio, I have $76,285 in the stock, up $45,527. Invested these shares with an average cost basis of $2.80. Invested in the stock for 83 days. Current quantity 11,000 shares. So all in all, in total, I have another 1,000 shares in a different portfolio and 1,300 in another one. So I have 13,000 plus 11,000 plus 1,000 plus 1,300 equals 26,300. But I also have those 15 options, which are essentially working like dollar for dollar. So it's essentially having like ownership of another 1,500 shares. So in total, 27,800 shares times the current price of $6.93. I currently have $192,654 invested in the company. So that's my position. That's my skin in the game. I'm not going to guarantee I'm going to hold it forever. Again, like that's not that's not the idea here. But I don't plan on selling anytime soon. Like literally anytime soon. Once we get over like 20, then we'll talk. You know, once we get to like between 23 and 30, then we'll talk about reducing some exposure, selling some calls or something. But at $7, dude, absolutely not. Off the table for me personally. And again, you can see today the Dow is up 1.35%, S&P 500 up 0.76%, NASDAQ up 0.63%, Russell up 1.6%. The VIX is down about 3% today. Bond yields are dropping about 1.5 basis points to 4.019%. At one point, they fell below 4%. So you have seen another drop in interest rates. That's great. Oil down 1.7% today. Natural gas down 3%, and Brent crude down about 1.5%. Gold even down 0.2%. Now, if gold was skyrocketing today, I would say the recession trade may be coming back a little bit. But the fact that gold is actually red today, I think is positive in correlation to what the broader markets are doing. So what's happening today is kind of multifold, okay? So we had CPI. CPI month over month for the headline came in at 0.4%. The expectation was 0.3%. That came in a little bit higher, but that's dominated again by food and energy, which we don't really pay too much attention to. CPI core month over month came in at 0.3%. Expectation was 0.3%. CPI year over year for the headline came in at 2.9%. And CPI core year over year came in at 3.1%, meeting expectations in all categories. But if you look at US super core CPI month over month, that only came in at 0.33% versus the expected 0.48%. So core, super core CPI came in much better than expected. And I think that is the positive takeaway from the CPI report today. But initial jobless claims soared to the highest since October 2021 at 263,000. Okay. Honestly, I'm a little shocked that markets are taking this so well. Initial jobless claims, this is for the week of September 6th, are seen as one of the most up-to-date measures of the labor market. Okay. This skyrocketed. I mean, from the expected 235,000 to 263,000. Wall Street is taking this as followed. There's weakening, but it's not recessionary. Inflation, while high, is not going higher. And the Fed now needs to cut at least 4 times over the next 4 Fed meetings. So that's what you're currently pricing in. 4 rate cuts over the next 4 meetings. You can see that here. Rate futures pricing reflects bets on 4 straight quarter-point Fed rate cuts through January. So Wall Street is saying we have some weakness, but we're going to be getting a bunch of cuts. And Wall Street is literally voting with their dollars today, saying the rate cuts are going to be better than the weakening in the markets. It's a fine line here, okay? You guys know I don't think we're going into a recession. The U.S. economy for a very long time has not just like slipped into a recession. That doesn't happen, okay? The economy is too big. It's too diversified. I've made this analogy with a boat many times now. If you're in a small fishing boat, like you can turn very easily, right? Things can turn for the analogy's sake, right? The turn is the economy, right? If you're in a yacht, it's going to take a little longer to turn. If you're in a cruise ship, the biggest ship in the world, it's going to take a while to turn that thing, okay? That's kind of a representation of the economy over time, right? Back in the 1800s, you had recessions all the time because the economy was like a small fishing boat. It could change and turn pretty quickly, okay? Well, today, it's a very large economy. Things don't just go to crap overnight, especially earnings in the markets. They don't tend to be super good. Like last quarter that we just got through was the best earnings season we have seen in a very long time, in many, many years for the markets, right? The odds are very low that earnings collapse next quarter or the quarter after that, right? So again, Wall Street is saying these rate cuts are a larger positive for stocks and for the economy than slight weakness in the economy. But if we start to see economic data coming in worse and worse, that will flip, right? Because Wall Street doesn't understand the way the economy works. So the Wall Street looks at data and says, hey, we could go into recession. Like, we don't need some kind of shock event. In all reality, you need a shock event to go into recession. Like, it's almost impossible to go into a recession without a shock event. At least we haven't seen that in a very, very long time. So this is the big catalyst today that is pushing risk assets higher. And you can see here, if we look at the probabilities for what the Fed is going to do, there's a 5% chance of a 50 basis point rate cut September 17th, 95% chance of a rate cut coming next week. For October, you are looking at an 88.7% chance of another cut. For December, you're looking at a 77.3% chance for another cut. For January, you're looking at a 47.7% chance of another cut. For March, hold on, let me make sure. There's a 26.8% chance of another cut and a 44.5% chance of a pause. So even in March, the odds are growing that you get another cut in March. That would be a cut over the next 5 Fed meetings, okay? There's only a 10% chance of a cut at every Fed meeting through April of 2026. Like, yeah, that in theory should help offset any weakness in the economy and prop things up a little bit. PIMCO's wilding on U.S. data says PIMCO's analyst Tiffany Wilding said inflation met expectations, but a sharp rise in jobless claims is more concerning. After a year of weak labor activity, the increase signals potential layoffs, which she called super concerning for the Fed. ECB President Lagarde says disinflationary process is over. But she says we continue to be in a good place. Inflation is where we want it to be. A Utah official says that the shooter in the Charlie Cook assassination moved across the roof to the shooting location and then fled into a neighborhood. Utah officials say that they have good video footage of the shooter. And they actually recovered the weapon that they believe was used in the shooting. And Donald Trump announced Charlie Kirk will be awarded the Medal of Freedom, the highest honor for a civilian. Trump says, if you attack the U.S., we will hunt you down. Lutnick says, we're going to sort out India on trade. Lutnick says, we'll sort out trade once India stops buying Russian oil. So basically, it looks like eventually there will be some kind of trade deal done with India. U.S. Commerce Secretary Lutnick says there's a big deal coming with Taiwan. Lutnick says we will probably get a deal with Switzerland. Lutnick says we made a deal with South Korea. We will see if they come through. Lutnick says that tariffs are bringing in $40 billion a month. Lutnick says we will see GDP growth next year over 4%. Lutnick says the Europeans will block Chinese cars. They'll learn. Chinese cars are not competitive. They're government-backed. Lutnick says that Trump will make deals with nations for workers. We'll get short-term training visas. Lutnick says the government of China is eating most of its tariff. China is paying an average tariff of 52%. Lutnick says he is confident the Supreme Court will side with the U.S. on tariffs. And Lutnick says that Nvidia and Trump settled on 15% revenue share. The IMF, the International Monetary Fund, says, quote, our sense is the Fed has the scope to begin to lower rates. UBS puts the recession probability at 93%. This is actually very bullish if you're a bull, right? You want to see people bearish on this market so they get proven wrong, and that's where stocks will continue to climb. And the FBI is seeking the public's help to identify a person of interest in the fatal shooting of Charlie Cook at Utah Valley University. They've released these images with a $100,000 award leading to an arrest. U.S. mortgage rates post the biggest weekly drop in at least the last year. Trump's nominee to be ambassador to India says the U.S. is on track of resolving hiccups in the relationship with India. This headline here from Axios says Lutnick moves the goalpost on Trump's ownership of the economy to the end of this year. Goldman Sachs CEO David Solomon says job data shows signs of economic softening. Now, the odds of a government shutdown are up to 55% on Polymarket today. We did get a new AI investor sentiment survey today that is so bearish, it is incredibly bullish, okay? Again, as I've talked about many times on this channel, you need to see people that are bearish. You need to see bearish positioning, like shorts being short in our markets, for an upside surprise to happen, for stocks to go up, and for shorts to cover, or for more investors to get off the sidelines and get into markets. Now, bearish investors today are coming in at 49.5%. That is up from 43.4%. So an over 6% rise in bears. Neutral investors fell from 23.9% to 22.5%, so a drop of about 1.5%. And bullish investors fell from 32.7% to 28.0%. So if you're bullish right now, you are damn near in the minority. Okay, you're damn near like standing there by yourself at this point. Not a lot of people are bullish on this market in simple terms. The CNN Fear and Greed Index has also reset a lot recently, sitting at 53 today, which is neutral. Market momentum is greed, stock price strength, extreme greed, stock price breadth is greed, put and call options is greed, market volatility is neutral, safe haven demand is in fear, and junk bond demand currently in extreme fear. If we look at the percent of stocks trading above their 50-day moving average, this is, again, a big day. In terms of the internals in our markets, the risk on nature of the day today, you see about 5% of stocks breaking above their 50-day moving average, currently sitting at 64% of stocks. So typically what happens before a large market drawdown, like a correction or crash is the internals of our markets get weak, right? Like big tech or certain areas can hold things up until they don't anymore. Well, what you're seeing here is the internals of our markets are actually strengthening from about mid-July. So you've actually seen a improvement in market breadth over the last month or two, which is a sign that, even though we're in a weak seasonal September period, like we're not in utter danger of seeing some kind of reset in stocks. At least that's how I'm looking at it. So hit the like button as well as subscribe to the channel if you have not done so already. Check out the link down below in the description of this video. If you want to come join us again, what we're doing over there is going out finding small cap AI stocks before Wall Street does. Okay, that's what we do. That's how we can, in my view, minimize risk and maximize reward. Is not investing in the zombie dog shit companies, but going out and finding the really good ones, okay? And investing in those really good ones before Wall Street understands the opportunity. This portfolio year to date is up 169.67%. I think this portfolio is going to turn into well over $1 million by 2027. So that's the goal. We'll see what happens. So far, so good. Recently, one of our stocks has really went parabolic. Today is a good day for the entire portfolio, but one stock has really been working well, and I think it's still early stages for that one. So yeah, come check it out if you'd like to. Remember, I'm not a financial advisor. I'm not a financial planner. I can do some reckless shit sometimes that is definitely not going to suit your personal financial decision. So come to your own conclusions and contact a financial advisor before making an investment decision. With that said, ladies and gentlemen, have a great rest of your day, and I will see you in the next one.